What is up, everybody? Logan here again with another video coming right at you guys. And today we have another sponsored video. This video is by GoldMining, GLDG. And what's really cool about GLDG is I've actually had them on the channel before, and this is a little updated video. I have a couple videos to show you guys, a little bit how the Fed pivot's affecting them. And one really cool thing about them is they own 32 million ounces of gold. And if they were priced like the median, they could sell that portfolio for a minimum of $30 an ounce, which is, of course, 900 million roughly, to 8x the position potentially. But right now, the market cap is 130 million, and they own 55 million in GROY shares, which means the other 75 million in market cap is what the market is valuing their 32 million ounces of gold at. Which is about a 90% discount based off the average industry price. So anybody who doesn't know, one of the guys who founded this is Amir Adnani, and also their CEO is very smart. We're going to hear from both of those guys here. Let's take a look at the stock price. Right now they're about 115. If you guys remember when I made the video last time, back around September, October, GLDG was actually about 85 cents. So they have moved up quite a bit, and I know the market's finally pulling back a little bit. But overall, pretty interesting and a pretty solid spot from a technical base as well. If you guys take a look at over the long term, kind of what the prices were in 2020, and overall how the market is adjusting to them. But a lot of the price targets you'll see for them are around the $5 to $6 range, just because of the current value of gold and how much they own. The Fed pivot will be good for gold in 2023, says Bank of America. And if we look down here, this is an article from December, but if you guys check this out, here is the gold continuous contract kind of rising from the end of last year back towards where it was through mid 2022. So the commodity strategy team at Bank of America thinks gold has farther to go. In a comprehensive 2023 commodity outlook note recently released, Bank of America says the price could exceed $2,000 an ounce next year. As of all the precious metals, gold has the most to gain on a Fed pivot. With relatively limited commercial uses, gold has always been driven by investor demand, and that demand in turn tends to be impacted by borrowing costs and the dollar in which gold is denominated. Pivot away from the aggressive hikes through 2023 should bring new buyers back into the market, which is very true if you guys look at how rates affect the market performance and how people kind of view risk and taking risk on through recessions, pullbacks versus like a solid standard bull market, right? So here are the gold purchases from central banks, and they've actually picked up quite a bit again. If you guys see Q1 of 2022. So as you see that, right, more people going into commodities and coming out of stocks. However, central banks make up only 20% of what Bank of America terms total implied investment for gold, and so their interest is not sufficient to really get a rally going. For that, gold needs increased demand for bar hoarding, physically backed ETFs, OTC net investment, and official sector purchases. Finally, here's another factor Bank of America doesn't mention. Some market observers have speculated that one reason gold did not rally as much as expected during recent years was that a significant size cohort of potential investors were attracted to crypto instead. With anxiety over crypto assets building, may bullion now attract some of those players? And that is something else to take into consideration. A lot of the money that is out there that was invested was in the crypto space, right? Crypto is a massive market cap because of the whole Coinbase issue, right? Overall, if you take a look at everything that happened with FTX and SAM and all of that, you're going to see money come out of those assets and move into something else, right? So let's take a listen, a 6-minute video from the CEO. We're going to do a little clip out of this one.
Currently, we are undervalued, currently receiving about $3 per ounce valuation on those resources. We've begun the task of unlocking that value and delivering it right to our shareholders. Gold Royalty Corporation. That was a spinout created last year. We raised $90 million on the New York Stock Exchange from royalties created from within our portfolio. That endorsement of our portfolio showed the strength that we have. Now even pays us dividend income, some $1 million for our company, which helps fund the next stage of growth. We own over 20 million shares in that company. Like today gives us almost $70 million on our balance sheet to further unlock value. So the next component of our portfolio is likely to be US GoldMining Inc., set to be launched with an IPO this fall. We've already brought in an experienced explorationist and CEO who has several decades of experience developing and advancing projects all over the world, and especially in the north. Knows the northern latitudes very well. So an experienced team. We've put a board together, very focused on the ESG issues, environmental issues, working with the stakeholders. The gold mining shareholders will be the largest shareholders in that company.
That's a little bit from Alistair about what they've been doing. And of course, we've talked about the Whistler deposit in the last video, right, in Alaska, and how they've branched out really well over North America and South America to kind of diversify their locations. So we're going to hear a little bit from Amir himself.
And so in 2016, we had, in terms of share price performance, you look at how we performed at the time. Of course, at the time, our ticker symbol was BRI for Brazil Resources Inc. With the name change, we're now ticker symbol gold on the Toronto Stock Exchange. But back in 2016, if you looked at our company and the measure of gold resources in the ground on a per share basis, we held a lot of value there. And as a result, that really made us a high beta name. When the gold sector really started to rally, you see the share price of gold mining, I believe that year, was one of the best performing gold stocks, outperforming the GDX share by a wide margin. And again, it was because of the leverage to having significant gold resources in the ground. Since that 2016 run, we have increased our total gold resources, nearly doubled it through 3 acquisitions that we've made since then.
So that was Amir telling us basically about how the stock price has kind of differed in the last few years, right? And how they're best positioned now compared to how it was even back during the bull run. So that's always a good sign to see. We'll take a look at their gold mining assets. You guys can see, this is one of my favorite charts that they have, which basically just shows all their diversified portfolio assets. And here you can see 81% of the commodity exposure is gold. Then you have copper and even 1 little percent of silver there. But overall, right, we have the Whistler location up here in Alaska, and then we stretch all the way down to South America. Overall, I really like their diversification, and that's what you really like to see from a lot of these companies that are really trying to fuel their growth. So the last thing we'll touch on here is a little buy rating we have from Wainwright & Co. And this was actually in 2021, but their price target was about $6. And at that current time, the price was around 126. And if we go back over here and take a look at gold mining, you will see that we're right around that price still. And that's even through this crazy bear market, right? Everything that we've had to deal with over the past year. So I'm excited to see where this company goes, but that's going to be everything for me in this video. I appreciate all the support as always. And I think it may be worth checking out some gold mining. And I'm excited to see what you guys come up with. But that's going to be me for this video. I will see you guys in the next one.